Hey guys, welcome back to our channel Accounts Guru Cool. Learn accounting online. So based on the request of our viewers, we are going to create a more videos related to fixed assets. In that, this video we have created just for the introductions related to the fixed assets, how the structure of fixed assets work, what we have to understand from the fixed assets, what we are going to know more about the fixed assets, how the cycle of the fixed assets work. That's we are going to discuss in this video. So now, before going to start, just need to know that what is mean by fixed assets. So the fixed asset, it means that it's all the non-current asset. Then we have the two assets. One is current assets, one is non-current assets. What is mean by non-current asset? It means that if the life of that asset is more than 1 year, then we need to consider that as a non-current assets. And for that, we have to do the capitalizations. And that's going to be considered as fixed assets. Now, how it's going to work? So for the fixed assets, there are n number of types of fixed assets. Giving example, machinery, furniture, equipment, software, or goodwill, land, building is a tangible or intangible assets. Now, coming back to, you have to do the capitalization of that. What are all the cycles and how the fixed assets work? First, you know this is fixed assets, but what is the threshold for that? Very interesting to know that threshold. What is mean by this? So does it mean that for each and every asset or any uh, assets which life is more than 1 year, you have to do the capitalizations? No, there is no any straightaway policy from there is straightaway no any limitations or any price limit from the as per the accounting standard or cap, but it's depend upon your own company policy. And generally they used to keep that if the value of that asset is more than 5,000 in INR, then you have to do the capitalization of that assets. Now you know what is in the fixed assets, why we have to do the capitalization, what is the threshold for that. Then what next? The next is CWIP. What is mean by this? So the CWIP, it means that's a capital work in progress. Capital work in progress. So it means that that asset is not converted to the capitalizations. That asset is still under process. It's a work in process. Giving example, if you have imported any machinery and on that you have to do the installation, you have to add some tools, some foundation need to do for that, and you have to first do the trial. So it's going to be take a more times. It's going to be take a 15 days, or you can say the 1 month installation also we have to do. So till that time, that asset we have to park under CWIP. That's capital work in progress. And once that asset is ready, then other cost. So once the asset is ready for capitalizations, now we need to evaluate if any other cost is involved to convert that asset into put to use or keep it ready for use. Then what are all other cost is involved? Installation cost, if any tools are required, fixtures are required, or if you have imported that, that's a non-recoverable taxes. Giving example is custom duty, and related to the installation, whatever the workers cost required, if any technical team is involved, their charges, that's all we have to add and do the capitalization of that assets. So these are all the these are all the cost which require to convert that asset into put to use or keep it ready for capitalizations. Whatever the other cost is involved over there, that's going to be considered as the value of that asset for capitalizations. And once we have the put to use certificate from the respective user, then we are ready to do the capitalizations. Now we know the put to use date and that asset is ready for capitalizations. Then the next, for how many years we have to do the capitalization of that asset. It means that what is the life of that assets. So the assets is going to be wear and tear, and there should be some life we need to define for that assets. And for that as well, we have to define as per own policy, considering the life of that asset. Either it's going to be used for 5 years, it's going to be used for 3 years, or it's a 10 years, or if any machinery are there, then it's going to be used for 15 years. That all we have to decide when we are going to do the capitalization of that assets. So the cycle of the asset from the purchase to capitalization, it's very essential to understand. And before going to create a more videos by taking the practical example, how it's going to be work, how you have to evaluate the CWIP, capital work in progress, how other cost is involved for that, what is mean by put to use certificate, how it's look like, what's the life of assets as an example. So before going to discuss related to more practical, it's essential for us to know the theoretical part, which are going to be clear a more concept related to the fixed assets, how it works, and how the cycle runs till the time of capitalization from the day one when we purchase that assets. It's very essential for us to know, so we are able to get the more clarity about the capitalizations, clarity about the practical example. So now we know the life of assets is 5 years, giving example, then we have to do the capitalization of that assets. And once we capitalize the assets, what's the next? Now it's going to be depreciation. So that assets, if the life of that asset is 5 years, then we have to depreciate that asset. It means that we have to expense off that assets within that 5 years. And how it's going to be work. So the 5 years, there are different method for depreciations. One is going to be is a straight line method, or it's a WDV, written down value method. So whatever the our own entity defines the policy for that, based on we have to do the depreciation or depreciate of that assets. So this is all scenario how it work related to the fixed asset threshold, its capital work in progress, other cost, put to use certificate, the life of assets, and then finally capitalization and depreciations. What next? Sale of assets. Now we have capitalized the assets, but over the period of time, if there are certain issues or we want to replace that asset and we have to, it's required to sell off assets, then how it's going to work, on which value we have to do the sale, and if whatever sorry, whatever the WDV, written down value, is there in the books, and if we sell that assets more than that value, then how it's going to work? Either we have gain on sale of assets or loss on sale of assets. If your WDV is around 10K and you sold that asset for 15K, then here you have earned the 5K as a gain on sale of asset. Then how it work? Similarly, if there is a loss, then how it works. That's also we need to understand, and that we are going to discuss in our upcoming videos related to fixed assets. What next? What are all the other scenario related to the fixed asset? Depreciate 100%. So when your asset life is over and you have to do the depreciate of that assets within the 5 years, and at the end of that, what's going to happen into the books for that asset? If that asset is there, but doing the depreciations, that asset value is zero into the books, then what we have to do for that? That also we need to think, because asset is going to be there and asset is um, replaced and still it's using, or still it's in a conditions where we can use, then but there is nothing is in a balance sheet, and how we are going to identify either that asset is with us or no, or either we have to keep it in the our fixed asset register, stating the value of that asset is zero and keeping the quantity of one. And if it's a zero, either that's going to be captured into our fixed asset register in the system or not, or we have to keep a minimal value for that. That's also interesting to know. The next, accounting entry. It's a very essential for us to know for each and every stage. When we purchase the asset, when the asset is into CWIP, when the other cost is involved, when it's put to use, when we do the capitalization, when the depreciation is charged on month, if we do the sale of asset, if we earn the loss on that, or if we earn gain on sale of assets, then what entry we have to generate, what's the accounting entry we have to pass into the system. That's all we are going to discuss in our upcoming videos. And as like our last series related to the R2R reconciliation, how to success into your interview, and now we are coming up with fixed assets. In addition to that, we'll try to create a in between few videos on R2R, related to R2R, related to success mantra to crack the interview and fix assets. So we are going to create all videos related to whatever our viewers ask. So this is a one for which 2-3 times we have the request from our viewers. So we thought to take this also into our agenda and create a videos related to this. So this is related to the basic introductions and basic concept of fixed assets. In our upcoming videos, we'll create the more videos by taking the actual scenario, and we'll plot the entry into the Excel by taking the some example of some dummy invoices, and based on that, we'll get a more idea how it works, what accounting entry we have to pass. So this is just a basic concept related to the fixed asset, how it works, and in a practical scenario, how it is going to work, that we will refer and that we are going to know from our upcoming videos. Thanks viewers for watching the video till the end. Request viewers to like the video, share the video, and subscribe our channel to get the more practical knowledge related to accounting and finance.